So I'm very pleased to be here with you all today and glad to see that there's such a strong turnout for a very important and interesting discussion. Quickly, just in terms of format, before I introduce myself and everyone, we're going to have a conversation up here with you for the first 30 or so odd minutes, or 45, depending on timing. And then we're going to turn to you all for a bit of Q&A. So have the wheels of your mind turning as we go along and as you listen. And it would be wonderful to get as many questions and as much interaction with you as possible. So as I was saying, I'm with Dahlberg. Now, Dahlberg is a firm that was started about 20 years ago with a very simple mission, which was to figure out a way to combine financial, social, and environmental value. And believe it or not, 20 years ago, that was somewhat of a crazy notion that one could actually be both interested in creating shareholder value in tandem with social and environmental. And now, here we are 20 years later with such a vibrant community of practitioners and investors doing just that. Now, the work that we do is with both capital allocators, asset managers, and investees, helping find the opportunities, structure the funds and facilities, and deploy the capital. And with that perspective across emerging and frontier markets today, I'm extremely excited to introduce you all to the 5 panelists that we have up here that are going to talk about the SDG framework as an investment framework and share their reflections together and with you about their lived experience of utilizing it as an investment framework. And so let me just introduce you to who we have here. We have Rob Brown, all the way down on the end. Rob is the senior partner of Atlas Impact Partners. Next to him, Adam Heltzer, head of ESG. I should really know that acronym, shouldn't I? ESG and Sustainability at Partners Group. And then Eric Rice, managing director and portfolio manager at Wellington Management. Rolfine Kuipers, head of responsible investments and strategic relationships at Deutsche DWS. And last but certainly not least, Anna Pott, manager of responsible investments at APG Asset Management. So I will turn for a moment and ask my guests to each introduce themselves and a little bit now that you know their names and their organizations, and then we will dive into the discussion content-wise today. So perhaps, Anna, why don't I start with you and we can flow back this way.
Thank you.
I think so. Is your little green light on?
Yeah.
Okay, this little green light is...
Oh, okay.
Yeah.
Here. Yeah. Yep. So, now you can hear me. Thank you. So my name's Anna Pott. I work for APG Asset Management. And at APG, we manage the assets from pension funds in the Netherlands. In the Netherlands, 1 out of 5 families depend on their pensions with our clients, including ABP, which is the government pension fund. So being a pension fund investor, just by the nature of that, makes us a long-term investor. We need to serve these families. We need to serve the children of the children of the children of these families in terms of their pensions. So by the nature of who we are, we need to have this long-term vision while investing their savings.
Wonderful. So
10 years ago, we started, and I started to work at APG in the responsible investment team. And over the past 10 years, I never thought I would work so long for a pension fund investor at a financial institution, being a political scientist, studied human rights law. Actually, I think this is my spot. If we want to have impact, if we want to be propelled, I like that phrase, in terms of contributing to sustainable development.
Thank you. Rolfine.
Yes, my name is Rolfien Kuipers, and it's remarkable that we have two Dutch ladies on the panel this morning. My name is a little bit less pronounceable than Anna's is, but my name is Rolfien Kuipers. I'm with DWS. I'm the Head of Responsible Investments and Strategic Relationships. DWS is a newly branded company, but was previously known as Deutsche Asset Management. Deutsche Bank IPO'd DWS in March of this year, and we rebranded our global business DWS at that point. So that about DWS. Being an asset management company originating from Germany, and strong European roots. We started focusing on ESG 25 years ago and actually started our impact investing business 20 years ago. And it was referred to on a slide by Anna. It was at that point Deutsche Bank, but it was actually the asset management part of Deutsche Bank that started its first microfinance debt fund. So a long history in ESG, big focus on the Sustainable Development Goals, and I very much look forward to our panel discussion.
I'm Eric Rice. I've lived long enough to have 3 careers. I started out as a development economist for a long while, and then migrated into finance and was doing conventional finance for also a long while at my age. You do a number of things for a long while, and what happened was I observed what friends of mine were doing in social enterprise or in private markets, impact investing, and wondered if we couldn't bring that to the public markets and develop impact investing at scale and with more liquidity. You know, it occurred to me that it was a paradox that you have to have $1 million of liquid assets to be a do-good investor. So couldn't we do something where if you have $100, you can invest through Schwab or whatever? And so that's what we tried to figure out that's my next career, is these last 5 years as an impact investor, trying to bring the authenticity that's done in the impact investing that's in private markets, but to more of a mass market.
Thanks, Adam Heltzer. And first of all, just wanted to say that I'm honored to be here and very excited to be part of this vibrant community. It's my first High Water Women's event, so thank you for that. Brief word on my background: spent the first long stretch of my career also in development aid, so did a lot of infrastructure development, then migrated into agriculture, agribusiness, smallholder farmer work, especially in post-conflict zones like Iraq, southern Philippines, South Sudan. But there was this theme that kept coming up in all the development aid projects, which was to be effective, to be long-lasting and sustainable, you had to engage the private sector, this mysterious and monolithic private sector. I'd spent 8 years in DC at that point and said, I want to get closer to this private sector. So I moved here to New York. I worked for the World Economic Forum for 2 years as basically the agribusiness client manager. So Cargill, Syngenta, some beer companies, those kind of massive companies that actually affect all those smallholder farmers, and thought, how can I help them improve their approach to sustainability? Then after 2 years, going to Davos a couple times, I realized this is not 30,000 foot level, this is 60,000 foot level. I want to have a little bit more of an impact, and that's when I came to Partners Group a few years ago, because we have 65 companies, infrastructure assets, real estate assets around the world. We have the ability to impact about 180,000 people, and I have a very clear mandate from my board to actually improve how those companies run. That could be energy management, gender equality, health and safety, any of those kinds of ESG topics. And then for this panel specifically, about a year and a half ago, we started to develop PG Life, which is a fund, private markets fund dedicated to the SDGs. And as many of us know, the SDGs are so high level, the targets are less high level, but still quite high level. And so we spent about 6 months last year really building an impact methodology to map those high level goals into an actionable investment strategy. So that's the practitioner view I can bring to this panel today.
Excuse me, good morning. I'm Robert Brown at Atlas Impact Partners. Before I get started, I just wanted to relay a quick story about something that happened maybe 15 minutes ago. I was talking to a woman who's here, Shelley Porgas. Shelley, you there somewhere? And anyway, she said that when she was starting out in her career, that she was fortunate enough to have been noticed by some men. And I thought, that's really interesting. So we're going to be talking about moving billions of dollars of capital, trillions of dollars of capital. I just wanted to take a moment and reflect on the work that High Water Women do, because as the father of a daughter, of a 16-year-old daughter, who's trying to figure out who am I in this world, I think the example that you set is critical. And I just want to take a moment and thank you for setting that example for all the young girls out there. So Atlas Impact Partners is a hedge fund, which is somewhat unique in this space, I think. We started out negative 2.5 months ago. We launch, or will launch our strategy publicly on January 2nd. And we came together, the two partners and I, from backgrounds that had been long-lived in the world of Wall Street. We had all been on the sell side and the buy side for many years at organizations where we were looking at companies that we all sort of agreed were part of what we call the impact desert, right? Large cap insurance companies that are doing more or less along some measurable outcome. And while it's really important to celebrate the work that people like Pepsi do in gender equity, we also felt that there was a more important mission aligned with finding those companies that are actually further up the supply chain or further up the production chain that are having higher impact, direct impact in the public markets. As some of my colleagues here on the stage have said, those companies that are in the public markets doing what private sector investors have been doing for a long, long time. So the three of us all put our heads together and said, how can we come up with a strategy that does that? And essentially that's what Atlas Impact does. We are long companies like SMA Solar, and we're short companies like Cummins Diesel Engine. And there's lots of stuff in between. But that's essentially our thesis, right? Find the companies that are driving impact at the highest level of the ecosystem in which they operate. We've been around for about a year now, and as I said, we launch in January, and we're looking forward to talking to all of you about that, and looking forward this morning to talking to you about what we're going to talk about. So thank you.
Great. Well, welcome all 5 of you. You can see that High Water Women has got a very diverse set of perspectives corralled here up on stage for a good conversation. So as we dive in then, maybe let's just set a little bit of the context and the parameters for this conversation entitled SDG Framework 3 Years On, Where Are We? Now, I would imagine this audience, we're all relatively well aware of the SDGs and what they are, but if we step back for a moment, we recall that the SDGs were introduced in the context of a world in which, you have something on the order of 70% of the population due to be living in cities by 2030, and yet equally 70% of that population saying that they are going to be living in substandard housing. You have 1.5 billion human beings moving into higher energy consuming income brackets, while 1.2 billion still lack energy access at all. And you have the poorest households in the world spending 60% of their household income on food, and yet widespread undernutrition and malnutrition. So in a context, obviously, of a world with lots to do in terms of creating economic opportunity, certainly, but even just basic social and health welfare, the SDGs are introduced, of course, primarily by policymakers, 17 goals. And these 17 goals, I'm not sure if there's a depiction of them, but I can't read all 17 to you because it'll be far too tiring. But they really range. It's everything from goal number 1 of no poverty, goal number 3, decent work, and a cheat sheet. Goal number, thank you. Goal number 3, which is decent work, or goal number 8, which is, I think 8 is decent work. Actually 3, I think, is clean water and sanitation. Bottom line is, it covers a wide range of issues. Basically, the 17 goals that are, should they be achieved by the 2030 deadline, would create the world in which everyone, everywhere can realize their full potential. That, of course, is the goal. Now, why then would the SDGs be used as an investment framework? What does that mean? Well, it means that in order to achieve the goals, of course, there's an enormous amount of capital that's required. And many of you will be familiar with the oft-cited statistic, which is we need about $4 trillion US per year, per annum. And we have about 1.5 at play right now. So in a $2.5 trillion gap is not an insignificant one. And so it's certainly not one that's going to be met by official development assistance alone. It's certainly not one that's going to be met by domestic resource mobilization alone. It really requires pools of capital coming from all corners, private sector and otherwise. And so the SDG as an investment framework. I guess an opening question then that I turn to the crew here on stage is, what has been your experience? The SDGs, the advent of them 3 years ago, how did they either change how investing happened at your organizations, or how has it shaped it over the last 3 years? And just invite a couple of you to share thoughts, and we'll go from there. Rob, I see you nodding vigorously. Do you want to share a couple thoughts, then I'll go to Rilfine?
Sure. So I think it's fair to say that they didn't really shape the way we created our strategy. They really are the defining characteristics of our strategy. There are 17 SDGs. One of them is we pledge to support the work that we just defined, so I think it's really 16, right? But I think as a practitioner, it's always been important to me to think carefully about practical implementation of a thesis. So I thought long and hard with my partners about how do we get from this high-level set of objectives down to our strategy. And what we did was we boiled down really the 16 objectives into the 6 themes that define our strategy. And I'm going to read them because my communications consultant, David Press, would be very upset with me if I didn't say them exactly as he helped me define them. So they are: modernizing capital and industrial infrastructure, tools for healthy and productive living, harnessing beneficial digitization, enabling environmental solutions, creating a sustainable food system, and financial services as a force for good. I think those are all very consistent with the SDGs, and the way we think about investing is to always align ourselves with one of those 6 thematic buckets. But I think it's also important to be clear with ourselves, and you alluded to this, but if you go to the implementation framework, right, the Addis Ababa agenda, what you see is 134 different agenda items. Does anybody want to guess in those 134 agenda items how many times the word invest pops up? 38. Anybody want to guess how many times private sector pops up? 16. Now, how many times does private sector investment pop up? Once. So it's really important as we're thinking about this framework to remember that the SDGs, as important as they are, were not developed for private sector investors. So let's be careful about implementing them in a way that makes sense, I think, as investors rather than as policymakers. We both have a critical role to play, right? But we're investors here on the stage. So let's make sure that we're staying focused on job number 1, which is investing.
If I could make a couple of observations. I mentioned in my introductory remarks that at DWS we started with ESG investing in the early 1990s. And depending on where you are in the world, the Netherlands started even before the 1990s with ESG investing. But it's hard for a lot of people to fully understand what that means. And then fast forward to 2015, and the UN Sustainable Development Goals come out, and they really provide a framework that is easily explainable to sophisticated investors, but also less sophisticated investors. And if you look at the 17 SDGs, you can choose these 3 SDGs are really important to me as an organization or me as an individual. And these 4 SDGs are really important to me as an organization. And I really want to actually comment on some of the work that APG has done, and then I'll hand over to Anna. Because when the SDGs came out in 2015, we at DWS immediately started thinking about how do we create investable themes, not only in private markets, and I mentioned earlier we've been long-term investors, for example, in microfinance, so thinking about gender lens investing, thinking about gender empowerment goes hand in hand with microfinance investing. But how do you make it available to public market investors as well? And I really have to credit the work that APG, MN, another large Dutch pension fund did. They created an SDG taxonomy, and I'll let Anna talk about how they went through that process. But the really great thing is that APG and MN and PGGM, I think, that the three of them made it available in sort of an open source format. So they put it on their websites. And so anyone who wants to get an understanding of how they created that taxonomy, that is now free for everyone else to look at. And we at DWS, around the same time that you actually started making that information public, we were looking at our own taxonomy, and we have added to the APG taxonomy. And I think this is such a great way where we can all work together. It is not having Wellington has the solution, or DWS has the solution, or APG has the solution. If we think about it, there's about $130 trillion in invested capital globally. Of that, less than $1 trillion is really targeted towards what we would call impact investing. And if we have to meet that $4 trillion number that Jana referred to, it's really important that the owners of that 130 trillion of invested capital are really all coming to this party. And for all of us to compete with one another and have a better definition, I think is not the way. For us, we really should do it in a crowdsourced platform and together bring this message to a wider public. So maybe that's a very nice introduction to hand over to Anna to actually talk a little bit about how they put that taxonomy in place.
Well, thank you for that great introduction. So here they are, the taxonomies. I brought one copy, but indeed the, as we call them, SDI taxonomies are available on our website, and I welcome you all to have a look.
And make them better.
And make them better, because I think it's so important, you know, the point you raised, by working together and make them better. You know, as mentioned before, the SDGs is not an investment framework. They're not written, not defined, not spelled out for investors. But we use them. And hey, if we're talking about change, momentum, being propelled, you know, here we are. Let's make sure that we use this momentum of the SDGs that have a certain, you know, sexiness. Apparently, people like them.
It's an easy framework.
Let's make sure we use them. You know, the cynical me would think, but before we had the Millennium Development Goals, you know, why is this? Whatever. It's here now. If it works, it works. Let's make sure we take this momentum and you know, make it work and bring that.
The difference between the millennial goals and the SDG goals, the millennial goals were before social media. Yeah. And the SDGs are in the social media world, so in the platform world, easily to be shared. And for once, the UN must have had a great marketing expert because they put a nice color, they made it very simple. It is easy to understand whether you talk to little kids in schools, which we do as well, because we think, you know, impact investing is not only for little kids in schools, but also bring these little kids into this framework. It's really for everyone to understand, and then different organizations can take different approaches, but really make it available to as wide a public as we possibly can.
But I think with that momentum and with that, you know, all these factors that are taking place and helping us at this moment, let's make sure that we take our responsibility and do not screw up. And what do I mean? What I mean with that is that make sure that this matters, and that we're not greenwashing, SDG washing investments. That, you know, okay, we can put this nice color on that, but that doesn't mean they are sustainable, or that doesn't mean that they're meeting the SDGs. So that's one big point that I want to make. Let's make sure that we work together in making this framework better. Maybe one word, because you mentioned that. What is it? What is our framework? So the way we define Sustainable Development Investments, SDIs, that's the other acronym that we added to the table. We mean investments in companies that through their products or services contribute to any of these goals. And why do I say products and services? It's because we want to differentiate between the business conduct and the products and services that these companies make. In terms of the business conduct, that's for us a clear threshold if we look into companies and looking into our investments. If a company is making renewable energy or contributing to any of these goals, but is doing that in an irresponsible business manner, of course, then it's not an SDI. Then it is a risk in our portfolio, then it's something that we and our portfolio managers need to be fully aware of and making sure that we engage with this company to operate in a more sustainable manner.
Can I jump in and make this a little concrete in a particular way that's appropriate for this forum? The UN SDGs are broad, even when you bring it down to the targets. And one thing that I'm really aware of is UN SDG number, which is gender equality.
I can look it up.
is notably weak. That you would think that you dig down in there and you'd find things about women's health. You'd find targets for women's and girls' education, but they're not there. Right. And so in the spirit of, yes, we should build on that, right. That's important. And also to recognize, there is no company out there whose central goal is solve gender equality as a problem, as an issue. But there are all sorts of companies that are making huge strides in these specific areas of health or education or access.
Right, and when you talk about any framework, it's got some measure of limitation, right? It's a tool in your toolbox, if you will. And one of the questions that I think people often have is, well, SDG is a framework, is that better or worse than ESG as a framework or any other framework I might be using? And Adam, I think you were saying earlier that you were part of the process of developing the impact principles, yes? So some of you may be aware the impact principles were introduced by the IFC in Bali. There's a meeting we all should have attended. The World Bank IMF meeting recently. And basically they are a set of principles seeking to create a single standard for really what qualifies as impact investing because, as I'm sure we'll get into shortly, of the impact washing and greenwashing concerns amongst others. So maybe Adam, speak a little bit to that. So maybe a bit to the limitations of the SDG as a framework, as you may have experienced it, and that experience of developing the impact principles.
Sure, just a couple observations on this point. So I think the last couple of years, an explosion, a proliferation of impact-related activity in the investment industry. And so there's one organization called the Impact Management Project, or kind of a coalition of different impact investors that said, if we want to have common language around what an impact investment is, we have to define the key questions to ask for any impact investment. Basically, if it's impactful, who exactly is benefiting, how much are they benefiting, what's the scale of the impact, what's the risk it doesn't actually materialize. So that was sort of started a couple of years ago, and that's helped a lot of investors frame the investment level. What the IFC has done to complement that is say, well, let's zoom out to the investment manager level and say, what does it mean to be impact investing manager? And so the IFC brought a group of about 15 different players in the industry together, Partners Group was one, to begin to have a sounding process around the 9 or so key markers of an impact investor. And they're fairly intuitive things. It's like, well, if you're an impact investor, what exactly is your impact goal? Can you articulate that? Before you invest, have you articulated what exactly is impactful about this business? Is there some level of monitoring the impact? Is there some level of independent verification? So last week in Bali, we launched those principles as part of the World Bank meetings. There's a consultation period between now and the end of the year, and so I encourage everyone to sort of weigh in. It's open source. And then next year, Q1, they're going to launch them as formal principles with a launch date probably April 1.
Thank you. Please.
Sorry, if I may just make a different point, which goes to the SDGs and also to measuring impact. I think it's great that a framework is being put together to measure impact, because I think ultimately that is what investors really want. In private markets, for example, with microfinance funds, or we run an African agricultural fund, it is reasonably straightforward to measure impact. But if we really want to get the significant amount of capital in the world, particularly individual capital, retail investors, high net worth, ultra high net worth, family offices, etc., if we want to get those investors fully on board, for a lot of those investors, private markets is not an option. It's really all around public markets. And if I now tie that into demographics, a lot has been said about millennials, but the fact is, millennials are the single largest demographic group in the United States today. There are 80 million millennials. It is also a fact, and very many different surveys have shown this, that millennials really care about social, governance, and environmental issues when it comes to investments. Over 90% of millennials believe these are essential when they think about allocating capital. And similarly, for women, that number is over 90% as well. And the millennial generation in this country will see a wealth transfer of about $30 trillion from the baby boom generation to the millennial generation over the next 30 to 40 years. So we're talking huge amount of capital and people who really care about these issues. Now, millennials may not be able to invest in private markets, but they certainly invest in public markets. And actually, they really like to invest online in passive product. And so when you talk to millennials and when you look at surveys, they want to invest in passive products that have positive impacts socially or environmentally. And they want good governance on top of that. So I think it is really important that impacts, that we can measure impact, and that there is no greenwashing, SDG washing, but that there is maybe an industry framework that really figures out how to properly measure impact across all different asset classes in all kinds of different wrappers.
I think this measurement key is quite key, and I will ask you to come in. By the way, I'm keeping my eye on all the millennials I see in the audience. We're looking to you for the future. So speak, if you will, a bit, Rob, on this question of measurement, and I would also like to hear more about the public and the private market, because you're touching on it, all of you, in a way, but let's share with our audience really what are we talking about.
Yeah, so I first want to say that I was, 3 decades ago trained as an econometrician. I'm an empiricist, and I won't believe anything unless you can show me the data, okay? So measurement to me is very important, and I don't dismiss it at all. I do think, however, that something Adam said is really important, which are the principles behind that measurement. There is a lot of greenwashing out there, and I think a lot of what gets paraded around as a metric is really just a precise measurement of something that is completely inaccurate, right? So let's be careful about jamming all of our investments into a framework that is blessed by someone. I think what's really critical, what's really important, is that every institution have its own rigorous set of standards that they impose upon themselves, and that they make sure they hold themselves accountable to, that adhere to the kinds of standards that you're talking about. Because what we really see these days is a lot of large cap growth funds that get slapped with some ESG data, and then all of a sudden it's repurposed. And Eric, I know you have a purpose-built fund, which is not that at all, but that's a pretty rare being in the public market space.
So I was going to tee off of that, because I think the way I think we talk about it is, we're all smart people. If you wanted to take an investment and twist it around to make it an impact investment, to give a justification, we're smart enough, we can do that. We've all been trained through school to be able to argue a point this way, oh no, argue it the other side. And so what that then comes down to is having to have a lot of faith about, we talk about financial fiduciaries. I think there's a case for an impact fiduciary, that whoever is managing your money or whoever is doing the measurement, you have to have faith that they're not trying to cram something that was ESG into an impact bucket, or something that was conventional investing into an impact story. And that, I'm not sure exactly how you get there, but for people working in the field in general, you have to be sure that there's an authenticity, that the people who are responsible for this investment are there for the reasons that you...
And let's be clear, Eric and I have the luxury. I think when I looked at your fund, you have something like 68, 70 positions. We carry 30 on the long side, maybe 40, 45 on the short side. It's a lot easier to be hard on yourself about defining impact than if you're trying to have some benchmark sensitivity to the S&P 500 or the Russell 1000. I get that. But I think it's that standard that needs to be adhered to, and it's that standard that we all need to be careful about self-analyzing.
Yeah, but I think to add on that, so it's that standard that we need to upheld. But I see also into that, to come to that point, how do they make the argument one way or the other way? I think there's a big role for the investors around here. The investors, they talk the language of the investor relations and the boards. So if they put these questions on the table, and not only once, not only by the ESG or the responsible investment team, but by the portfolio manager in whatever strategy, asking the questions in an earnings call, and scrutinize, on that point, and not only once and not only one person, but on an ongoing basis, then we get this point about putting that brain power to work, and putting that accountability mechanism on, okay, but what does it really mean that you do? And report, disclose, we need that data.
Yeah.
If I may make a point, so Anna actually mentioned earlier that we need to ensure that we don't trip up, that there is no, that SDG investing doesn't trip up somehow, creates a huge issue, and suddenly the credibility is completely gone. You mentioned there are a lot of smart people, smart investors, smart people in this room. But the reality is, as investors, we ultimately work on behalf of the people that we invest for, and they can be very smart, but they may not be investors. They may have very little understanding of financial markets. So whether it's regulation, whether it's an industry framework, the EU is taking a very clear position. The EU has decided that it wants to be the most sustainable economy on the planet and set an example for other countries around the world. And they came up with a plan called the EU Action Plan for a Sustainable Economy. And within there is a framework for the financial industry. And within there's a framework for asset owners, asset managers, private banks, retail banks. And within that, there is a definition of incorporating ESG into your fiduciary duty, and within that there is a taxonomy taking place of what that actually means. And there's a working group that is currently working on this. It has invited a lot of different players to opine upon it, but ultimately the goal of the European Union is to legislate this. So they are regulating it and they are legislating it. And so I think it's all wonderful and well that, everyone should have their own little thing here, but actually I disagree with that. I do think you need to have a framework, and whether it is the EU or the UK Treasury, the Bank of England in the UK just came out with incorporating the fiduciary into the fiduciary duty ESG considerations, and is also going a step further by beholding pension funds and other financial industry players to disclosing the issues of climate change on their portfolios and their businesses. So I think the EU is moving in one direction. The US isn't really there yet, but we shouldn't forget that ultimately we serve the interests of of nurses, of doctors, of firefighters, etc., who are not necessarily educated on what an SDG is, what ESG investing is. But so just having everyone have their own standards potentially creates exactly what Anna referred to earlier, is one big blow up and the whole industry is discredited.
I'm not sure.
Yeah, I want to be clear. I'm not saying everyone should have their own
I think
standard.
what I heard, if I may, just also because I'm getting the furious hand gestures, so here's what I'm going to say is, what I think that, if I hear, sitting up here listening to all of you, I think what I hear is the need for a consistent way, a single language, a roll-up, if you will, so that we can be able to compare and have a conversation across different organizations, institutions, public, private markets, et cetera, is invaluable. And that doesn't mean that you don't still need, which is right for your business, right for your fund, et cetera, a set of metrics and measurements that resonate fully with your shareholders and your investment thesis. I mean, I think that's what I'm hearing.
Yeah.
Now, what I find myself asking, is if I were to just pose a last question and ask for a lightning round before we close, and forgive us because we were running, I guess, a bit behind this morning. We won't have time, I think, for the Q&A portion, but you can pepper us at break later. But, here we are 12-ish, 10 years-ish, from the 2030 global goals. We are pretty much not tracking towards, from just a sheer, let's just call it capital perspective. So lightning round, one thought, quick thought from each of you about what do you think can be done to unlock the kind of capital we're hoping this SDG framework will actually unlock? What is the one or two things that you would do given a magic wand? Who wants to go first? Just jump, raise your hand and jump in. Whoever's got their lightning. Okay, Rolfine, kick us off.
I will just say, the people in this room sit in most likely you're all part of the sustainable investment bubble. So it's really not convincing you, but it's convincing all the people that are not in this room.
Amen. Adam.
Yeah.
I think we could use a bit of a conductor because we have a lot of instruments playing with the SDGs, but no one's saying here's what it means in gender equality or in SDG 3 health, what it actually means to support the SDGs. So helping to channel all this eager capital into areas where it actually would make a difference.
A woman, I should say. Eric.
I think good products, good investment products that can scale. There just aren't enough, and people, you all know it, are chasing after what is out there.
Right.
And even after all these years, I was going to say there's a hockey stick up of interest and of capital that wants to go there, but in terms of products to go into, I think that hasn't happened.
Yeah.
Wait, Anna.
I think all of the above, and to add a new one that relates to that momentum that the SDG language has. Use it in your engagement with companies, but use it in your engagement as a government bondholder. These are commitments made by governments. Why don't we hold them accountable and have the conversation in the SDG language? Now that seems to be a more appropriate language than, the old, we talk about human rights commitments.
That's a great point. And Rob.
Yeah, I think reflecting back on the conversation we just had, I think holding ourselves and our colleagues at other institutions accountable to the standards that are important, right, is what's critical, and calling people out when they're kind of faking it and hiding behind poor data. I will also say, for those of you who are U.S. citizens in the room, November's coming up, so go vote.
Well, on that note, I think we'll wrap, but thank you to all of you, and Rolfine in particular, but others made reference to a number of resources, and I thought that was tremendously helpful, and I hope you jotted that down. But please join me in thanking all of these folks for their great perspectives.